There's an old saying throughout the market: buy when others are fearful and sell when others are greedy. That's an old Warren Buffett quote. Right now, the market is extremely fearful, and the stars are really aligning for a bullish Q4 for the general market. So in this video, I'll lay out my bullish thesis for the next couple months for the S&P 500. I'll lay out why I think at the very least we are at a high likelihood to have a short covering rally here. Some could call it even an oversold rally. So I do believe we are about to embark on an oversold rally for the S&P 500, and I'll tell you why. At the end of the video, I'll give you a couple stocks that I'm looking into to kind of outperform the general market as we get an oversold rally. So with that being said, let's talk about it. So according to CNN, we have an extreme fear throughout the market. Their fear gauge is at 19, and that is definitely signaling that the market is feeling somewhat fearful. You can see it in prices, right? So market momentum is also signaling fear. The stock price strength, which shows you the net new 52-week highs and lows on the New York Stock Exchange, is reading an extreme fear rating. The stock market breadth is implying fear. So this kind of shows you the breadth of the general market. So this is screaming fear. And then put to call ratio is actually positive, so meaning that there's more put buying than there is calls, which also exhibits major fear. We saw that in March before we rallied. We saw that in December before we rallied. So definitely a massive signal that the market is likely going to rise, right? When investors start really positioning for the downside, that's kind of when the low is already in, right? So extreme fear in the option market. And then market volatility is implying fear with the VIX around 20. So also safe haven demand here, difference between the difference in 20-day stock and bond returns is signaling extreme fear as well. So every metric that we look at here is showing extreme fear for the market. Like I said, smart long-term investors, they buy when investors are fearful and sell when investors are greedy, right? And my favorite kind of metrics out of these is the put to call ratio, right? So we saw a super high put to call ratio, meaning that there are more puts than calls being bought right in December before we had that massive 30% rally. And then right in March before we had that massive rally after the SVB situation. So all these indicators are signaling that the market is likely to bottom here. And then BlackRock also thinks the market is going to have a very good Q4. So this chart shows me the S&P 500 index performance since 1957, when Q1 to Q3 we had over 16% gains. In only 3 instances since 1957 with this setup, we have had negative returns for Q4. That was in 1987, 1983, and 1967. So overall, if we were to look at history, we should be having a positive Q4 given the first couple quarters of this year. So BlackRock thinks we're likely going to have a good Q4. Market is fearful. And we're actually moving into a seasonal bullish trend as well. So in October, shares rise on average 0.7%. In November, shares rise about almost 1%. So definitely signaling here that the general market, the S&P 500, is bullish in October and bullish in November as well. So we're kind of seeing a lot of stars align, right? The market is extremely fearful, which has acted as a buy signal in the past. BlackRock, based on historical data, thinks we're going to have a good Q4. And we're seeing that the S&P 500 typically rises in the month of October and November. So why not now. Why aren't we going to have a somewhat of a short squeeze here? I really think the short squeeze will be within the bond market, and I'll talk about that in a second here. But we also just got a very weak jobs number, which you may be thinking, oh, weak economic data, that must hurt the market. No, it actually doesn't. It actually helps because it makes Powell's job easier. It makes the Fed less likely to raise rates. So this is actually a definite positive for the market. So I wouldn't kind of fall in the trap of thinking that positive news for the economy always means positive news for the market. That's really been the exact opposite over the past couple months in this market, right? And then we can see here when we look at the Fed Watch tool that the chances that the Fed is going to keep rates where they are actually increased 10% just in reaction to this news. So this Fed Watch tool here shows me what market participants are thinking about the stock market and really about what the Fed is going to do. So the current target range for the Fed funds rate is 5.25 to 5.50, and 81% of the market now thinks that the Fed will not hike at the next meeting on November 1st. And like I said, this is up 10% from 71% just yesterday, and it really rose in reaction to a weaker than expected jobs number. So expectations for a Fed rate hike have declined significantly today. That is brand spanking new news. That is today. So given expectations for a rate hike have dropped, well, you can expect investors to kind of put some more money into the stock market, right? So good to see that there. Definitely a positive development. And then let's take a look at the charts here. Let's just take a look at the 10-year Treasury rate. So right now we actually have overbought conditions for interest rates. All this is kind of a chart of bond buying. So really this translates into bonds being oversold, which obviously they're inversely correlated with interest rates. So bonds being oversold could see some bond buying here, which would push interest rates down. So my thought is that interest rates are likely to come down. I don't think they're going to go to 2% again or 0 like they were, obviously. But at the end of the day, I think it would be a nice logical move to see a move from about 4.7 on the interest rates to about 4.35. I think that's kind of the move we see from the bond market over the coming weeks. And I think as yields drop, obviously that will be a positive for the market, and it really be a positive for the NASDAQ, for the tech sector, right? Those stocks that are seen as risk assets. So Bitcoin, mining stocks, EV stocks, just really companies that aren't making a ton of money right now, they're going to really benefit from that. And then with that being said, let's take a look at some charts, some companies that I think could outperform the market based on technical analysis. So not going to be talking about the fundamentals of these companies whatsoever right now. Just going to be talking purely about their charts. So let's take a look at Tesla. So Tesla has just started to outperform the market once again. Unfortunately, it started to underperform the market in August, and now is starting to outperform. We're coming up to test resistance at around 260 for Tesla. So I really think if we're able to break over this resistance level at 260, we should see a larger move higher for Tesla. In fact, I think Tesla could make new highs over this next quarter if we're able to break through this resistance level at 260. This level is where shares had topped out in late August. So this is where shares have obviously moved lower in the past. So we're coming up to Tesla's level once again. If we break through it, I think we could see a quick move up to resistance at around $315. I shouldn't say new highs, as Tesla was at this level in August of last year. In September, it would be new 52-week highs though. So thinking Tesla likely breaks this level and moves higher to 315 over the coming weeks and outperforms the general market. And then another techie name here is Google. So Google has really performed very well, has been outperforming the general market since August, and has really been an outperformer over the past couple of years, right? But in the short term, recently just started to outperform the general market again. And then we use this 50-day moving average as support in each of the past 3 trading days, which to me signals that we could see somewhat of a jump off this 50-day moving average, which I predicted in the Discord today. Shout out to the Discord members if you got in on that option. We're up about 15% on those options, but let me get back to the video. So should be moving higher off of this 50-day moving average. I think we likely get a move up to resistance at around $144. This isn't a random level. I picked this level as this is where shares had topped out in March of last year. It's also where we saw consistent consolidation in 2022. So I think a quick move up to $144 makes some sense for Google here. So bullish Google, I think it outperforms the market as markets reverse and start to move higher to end this quarter. And then a beaten up stock. So the technicals don't look as pretty on this one, but I'm really thinking that C3AI, a stock that has obviously outperformed the market drastically this year and has really been killed in reaction to lower interest rates. I think this stock likely catches a bid around this support level. So this $24 support level had acted as support in late September. It's also where shares had consistently found resistance in March and in April of 2023. So past resistance becomes new support. I think this level likely holds, and we see a move higher up to resistance at around $30 for this stock. Also, it's worth noting that we are right near oversold conditions according to RSI for C3AI, which should help push shares higher as well. So with that being said, let's take a quick look at the S&P 500. I want to just touch on the general technicals of the market. So we almost are printing a double bottom here. So we bottomed out at around 420 in yesterday's trading session. We bottomed out around that level once again here today. Which I believe will act as somewhat of a bottom for this stock, as we're kind of right near support at 418, which is where the S&P 500 had topped out in February. Past resistance becomes new support, and this support level also coincides with this index's 200-day moving average. So I believe we hold the 200-day moving average for the S&P 500 and move higher over the coming weeks for the S&P 500. Obviously the index is oversold as well according to RSI. So oversold conditions, 200-day moving average should hold, and we should see a move higher for the S&P 500 over the coming weeks. So very bullish on the general market for the foreseeable future. Obviously that can change. Different news comes out every single day, but right now, based on technical analysis, I do believe the S&P 500 likely catches a bid here and closes this quarter pretty strongly. At the very least, I think this next month or so, we'll see a pretty strong oversold rally for the stock market. So with that being said, I hope you enjoyed the video. Please leave a like and subscribe if you did. I'll see you next time. Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots, which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.